Association, we wish to acknowledge the contribution of all the advertisers and those who have taken the stalls. Because of their contribution, we are able to provide such an excellent session for 2 days for a dirt cheap rate to all the participants. And also we want to thank all the participants who have stood by their decision to advertise in such a brand. So thank you, and on this juncture we will wish to felicitate the persons who have taken the stalls. So over to MOC.
Highest contributor to the Tax Conclave 2025, which amounts to rupees 2 lakh. A big round of applause for their sponsorship, and we are grateful to them for standing by us. We begin the felicitation with Pramod Software Solutions. The representatives kindly come ahead. Pramod Software Solutions, kindly come ahead. A big round of applause for Pramod Software Solutions. We next welcome Travel Sukham. The representatives from Travel Sukham, please come forward. Next we welcome Khandar Mehta and Shah, representatives from Khandar Mehta and Shah. We would now welcome Microvista. The representatives of Microvista kindly come forward. Followed by Soil to Soul. The representatives of Soil to Soul kindly come ahead. The representatives of Soil to Soul, please come ahead. I welcome SOF Sales and Accommodation, representatives from SOF Sales and Accommodation. The representatives of Insurance Pro Investment kindly move ahead. We welcome Insurance Pro Investment. Last but not the least, Your E-Locker. The representatives of Your E-Locker kindly come ahead. I understand. Advocate CA Abhay Desai sir, CA Jigar Shah sir, CA Punit Prajapati sir, CA Rashmin Vaja sir, and Advocate Samir Siddhapuria sir onto the dais. Is an all India rank holder at the CA examination. Sir has authored several books, Get Ready for GST and Sabka Vishwas Dispute Resolution Scheme 2019 are a few to name. Sir has addressed more than 500 seminars on indirect taxation till date. Sir has been awarded as the best column writer by the Gujarat Sales Tax Bar Association, and he is also a brain trustee in All Gujarat Seminar by Bar Association. Sir, we are honored to have you here today amongst us. I move ahead to introduce CA Jigar Shah sir now. Mr. Jigar is a fellow member of the Institute of Chartered Accountants of India and law graduate from Gujarat University. Mr. Shah has experience of dealing with indirect tax law for more than 15 years. Sir is a member of Committee of Indirect Taxes, Gujarat Chamber of Commerce and Industry since last 10 years. At present, sir is working as partner in MS Lakshmi Kumaran and Sri Dharan attorneys at their Ahmedabad office. Sir, we heartily welcome you here today. Please give sir a big round of applause. Next, I would attempt on introducing CA Punit Prajapati, sir. Ladies and gentlemen, we are pleased to welcome sir. He is representing Punit Prajapati and Company, a highly specialized firm in indirect taxes. PPC has established itself as a leader in providing knowledge-based legal solutions for GST, service tax, and related areas. With over 2 decades of experience, they cater to a diverse clientele from small businessmen to multinational corporations. PPC's unique research method and impressive track record in litigation, boosting a success rate exceeding 80%, underscore their expertise. We are honored to have their insights shared with us today. Thank you, sir, for being with us. Please welcome, sir. I now move forward and like to brief you all about CA Rashmin Vaja, sir. Sir is a practicing CA since 2004. A prolific speaker and author on GST and service tax, having conducted sessions at ICAI branches, the All Gujarat Federation of Tax Consultants, and other prominent forums. He has co-authored books on GST and service tax, empowering professionals with practical insights. Sir also serves as a visiting faculty at the Entrepreneurship Development of India. He has also held significant positions in esteemed organizations such as the Bombay Chartered Accountants Society and currently serves on the Indirect Tax Committee of the Gujarat Chamber of Commerce and Industry. We are honored to have sir amongst us today. Please give him a big round of applause. I finally take the privilege to brief you all about Advocate Samir Siddhapuria, sir. Sir is practicing as an advocate and works in areas of GST planning and providing opinions. Sir has been an editor of Sales Tax Journal for the year 2017-18 and 2018-19 and has authored numerous books on VAT. Sir has been a visiting faculty at prestigious institutes and has made 300 plus presentations across Gujarat. So we heartily welcome you to the Tax Conclave 2025. I would now request to welcome all the dignitaries on the dais with a memento. I request Advocate Dhruven Shah, sir, to kindly come forward and present a memento to I request Mrudang Vakil, sir, to kindly come forward and present a memento to Advocate CA Abhay Desai, sir. Let us welcome sir with a big round. I now request CA Dr. Vishwesha, sir, to kindly come forward and felicitate CA Jigar Shah, sir. Thank you, sir. I now request Advocate Ashutosh Thakkar, sir, to please come up and felicitate CA Punit Prajapati, sir. Next we have Advocate Dr. Karthikeya Shah, sir. Sir will be facilitating CA Rashmin Vaja, sir. I now request CA Jigar Shah sir to please come up on the stage to felicitate Advocate Samir Siddhapuria sir. Thank you, sir.
Sorry to interrupt you all. So after this session, it will end, the tax conclave, and when all the people are present here, I would like to thank the MOC, Shruti Mehrotra, for her MOC, the way she has taken all these 2 days, all the hard work. So we'd like to felicitate her too. So please come on the dais. Vishal bhai, please. Guys, કેવું પડે? Now we can start.
With due permission from all the dignitaries on the dais, I would like to start up with the question and answer round. Should we begin, sir? Yeah.
That we are going to deal with some 30 odd questions, and whatever the posers is being discussed, and if you have any other question related to the same poser, that you can definitely ask. And on behalf of the panel, I can ensure you that we all have studied the posers properly, and we will be able to answer your queries. So that with that, I would request Abhay to start with. Go ahead.
So first and foremost, I thank both the associations, the All Gujarat Federation of Tax Consultants and Income Tax Bar Association, for giving all of us this wonderful opportunity to share some of our thoughts on the posers. So let us start with the first poser. The whole idea, the way posers have been designed, is to bring out certain conceptual issues which can have wide implications in similar situations that you might be facing. So the first poser is basically a very typical situation which I'm sure all the businesses are facing. So this is the company Innocent Limited. So for financial year 1920 and 2021, they have claimed certain input tax credit, which is now disputed by the department. The show cause notice has been issued under section 74, subsection 1. The date on which the show cause notice has been issued is 30th October 2024. Now the situations where the ITC is sought to be disputed is A, where ITC has been availed but it is not reflected in 2A. B, where ITC has been availed reflected in 2A but the suppliers have not filed GSTR 3B. And C, ITC has been availed but the supplier's registration has been cancelled after the date of the underlying supply with a retrospective effect from, so ab initio cancellation from 1st July 2017 when the GST was introduced. The reason for cancelling the registration is that the supplier was not found at the registered place of business when the authorities made a visit, and the allegation of the authority is that the supplier is engaged in issuing fake invoices. Now, adjudication order came to be passed on 20th of February of 2025. Now, in this context, the limited issue that we are going to discuss, because all 6 posers that I am going to deal with are all on the issues of adjudication and appeal. So we are not going to deal on the merits of whether this ITC is eligible or otherwise. But the idea is to basically discuss the issues related to section 74 in this context. So the issue is to examine the validity of the proceedings which have been initiated under section 74. And the consequential poser is that if authorities find, that is the appellate authority finds, that this action which was initiated under 74 was wrongly initiated, then what happens to the action. So these are the two issues. If we go to section 74 subsection 1, it gives jurisdiction to the proper officer to initiate action in terms of issuing a show cause notice, asking the taxpayer to respond as to why certain ITC, which is alleged to have been wrongly availed, should not be recovered. However, that action is available only in a situation where the allegation is that that ITC has been availed either by reason of fraud or any willful misstatement or suppression of facts to evade tax. So the department, when they have taken this particular action, are alleging that because you have wrongly claimed the credit, you have, under the self-assessment regime, you are supposed to verify the facts of your supplier. And in these three situations, deliberately you have made a claim, you have suppressed that information because in the written you nowhere indicated that these are the facts, and therefore the department has initiated action under 74 and passed the order under 74. Now I am sure everyone agrees that these situations which are covered under 74 are all in the nature of an aggravated offense, where there should be a positive act which is committed by the taxpayer to deliberately evade tax. And the burden is on the revenue to establish the presence of those ingredients to invoke section 74. So in this case, in the facts, nowhere department is saying that you colluded with those suppliers or you benefited by the alleged offenses which are committed by those suppliers by either not disclosing the liability or short paying the tax or indulging in some billing activity. So in these facts, one can very well say that the ingredients of section 74 are not getting satisfied because nowhere any evidence is brought on record in the show cause notice except this bald statement that in a self-assessment regime, which is a standard statement which is you will find across all notices and orders which are under 74, that if the department had not initiated this action, then the taxpayer would not have brought forward those facts, and therefore there is suppression, and therefore the extended period is rightly invoked. So that is number one. Number two, even if we look at the definition of suppression, which now in fact stands omitted with effect from 1st November 24. Prior to that omission, the definition under section 74 stated that suppression shall mean non-declaration of facts or information which a taxable person is required to declare. So something which is an obligation under the law to declare, and if the supplier fails to declare that obligation with an intent to evade, then that situation falls within the ambit of suppression. In this case, nowhere 3B mandated that such kind of details of suppliers filing or suppliers payment of tax are required to be declared in your return so as to say that in absence of declaring those details, this is a case of suppression. So that is the second point. Now third and very important point. See what happens tomorrow. These are the orders which are issued under 74. Now as you know, in this particular case the order has been issued on 20th February 25. Now under 74 it is within the period of limitation. But now what happens if those ultimately in appeal, the appellate authority takes a view that 74 has been wrongly invoked. Now for that, the legislature has already made a provision by virtue of section 75(2). It's a very interesting provision and it will have wide ramifications, and that is why I designed this poser in this manner. Now what section 75(2) says? It says where any appellate authority or appellate tribunal or court concludes that the notice issued under 74(1) is not sustainable for the reason that the charges of fraud or any willful misstatement or suppression of facts to evade tax has not been established against the person to whom notice was issued, the proper officer shall determine the tax payable by such person, deeming as if notice were issued under subsection 1 of section 73. So in a way, 75(2) says that appellate authority, if it holds that 74 has been wrongly invoked, then the appellate authority is not vested with the power to redetermine the liability. It is the proper officer who is given the mandate to determine the liability. How the proper officer is required to determine the liability? It says by deeming that the notice which was originally issued under 74 will now be treated as if the notice was issued under 73. Now the constitutional validity of this provision is under challenge before many high courts, including our jurisdictional Gujarat High Court. But the ground for challenge is like this, that once you have assumed jurisdiction under 74 by alleging that this is a case of fraud, and ultimately the court or tribunal holds that it was wrongly invoked, then can the law give them an alternate jurisdiction by saying that now we will deem the notice originally issued under 74(1) as if it is a notice issued under 73(1). Under Article 14, courts have said that if the provisions are grossly arbitrary, manifestly arbitrary, then in that situation those provisions can be liable to be struck down. So on that ground, that entire challenge has been built by saying that by making 75(2), you are in a way arbitrarily giving a jurisdiction which was never originally exercised by the authority when he initiated the proceedings against that particular taxpayer. So that is one issue that we must keep in mind. Now second issue, see what 75(2), if we assume that it is a valid provision in law, then what 75(2) says? It says order has gone because the appellate authority has taken a view that that order issued under 74(9) does not sustain because that charge of fraud, willful misstatement, suppression has failed. Now 75(2) says there will be a fresh order which will be passed. The time limit to pass that order is 2 years from the date the appellate authority or the court holds that the original order was wrongly issued under 74. Now in that situation, 75(2) says you have to deem the original notice which was under 74(1) as a notice under 73(1). Now in these particular facts, if we see, the notice was issued on 30th October 2024. Now in that context, if you see, for 1920, because 2 years are concerned, 1920 and 2021. For 1920, the limitation to issue notice under section 73(9) will get to other aspect of whether that notification are valid or invalid in another poser. But assuming that the notification is valid, which extended the timelines for the issuance of the order under section 73, that is notification 56/2023. For 1920, the date was extended up to 31st August 24. Now the notice is required to be passed minimum 3 months prior to the date for passing the order. So in that situation, this notice issued on 30th October 24 would be beyond the period of limitation under 73 when it comes to 1920. For 2021, the 3-year period comes to an end on 20th February 2025. Minimum 3 months prior to that, you have to issue the notice, so that would be 30th November 24. This notice has been issued on 30th October 24. So in that situation, this notice then would be valid as far as 2021 is concerned. Because under 75(2), the officer will be now redetermining the liability provided the original notice is within the period of limitation under section 73(1). Now for 2021, this would then come within the period of limitation because the limitation ended on 30th November 24, and since this notice was issued 1 month prior to that on 30th October 24, therefore in my mind, if 75(2) is held to be valid, then in that situation this notice would be held to be valid as far as 2021 is concerned. So to that extent, the taxpayer will have to litigate on merits as to whether the ITC at all can be denied on these reasons of either some default committed by the supplier or non-filing of the return by the supplier. Now with this very interesting issue recently has come up. See, purposefully in this poser I took the date of 30th October 24 to make the things easier. But department has issued across the board notices on 30th November 24 for 2021 under 73. Now let us assume if the same notice would have been issued on 30th November 24, then can that notice be within the period of limitation under section 73(1). Interestingly, the due date for filing GSTR return for 2021 was 20th February 22. Under section 73(1), read with 73(10), the order is to be issued within 3 years from the due date of filing of the annual return. So that would end on 20th February 25. notice has to be issued under 73(2) 3 months prior to the due date for the passing of the order. Now the controversy is how do you calculate these months? So since the limitation to pass an order expired on 20th February 25, if you go 3 months back, then it would be whether it would be month of February, January and December. And therefore the notice issued on 30th November would be valid. Or you calculate months as a British calendar month and say 3 months means 28/2, 28/1, 28/12 and 28/11. If you apply that law under the General Clauses Act, then the limitation to issue notice for 2021 would expire on 20th November 24 and not on 30th November 24. I hope you are getting the issue. Therefore, if in this case, if the notice would have been issued on 30th November 24, then under 75(2), even if it is to be redetermined, then also the notice would be beyond the period of limitation. Now, to back these points, so one is on that entire issue of extended period, we have a lot of celebrated decisions, Cosmic Dicam, Univat Textile, so I'm not going to get into that. I'm sure you all know many decisions where the courts time and again have held in situations where extended period is available. For this second issue of how do you calculate the limitation for 2021 when it comes to actions under 73, we have this Andhra Pradesh High Court decision in the case of Cotton Corporation of India 2025 EIL 124, where the Andhra Pradesh High Court has taken a view that this 3 months from the date of the passing of the order would be as per the General Clauses Act, and therefore the limitation to issue notice for 2021 would expire on 28th November 24 and not on 30th November 24. So notice is issued on 29th November and 30th November 24. For 2021 would be beyond the period of limitation under 73. So that view one of the High Court has already taken. So I think that fairly covers the concepts that I intended to cover in this poser.
So the next poser is pertaining to that recent judgment of the Supreme Court in Safari Retreats. Section 17(5) lists out the ineligible credits. So you can't take the credit, and one of them is a worst contract service you avail for construction on immovable property. So let us say your target is to construct an immovable property. You can achieve this by 2 ways. You can say to L&T that you come with your material skills and give me the building. Generally we would say that as a turnkey project. This particular activity is falling into section 17(5)(c). That on turnkey basis you have given this construction contract to L&T, he will construct the entire factory for you and hand it over to you. These type of activities are not eligible for input tax credit as per the revenue. Now the other method of achieving the same result of constructing an immovable property is you purchase the cement from Ultratech Cement and then you ask the L&T to construct the building for you. So you are procuring services, you are procuring goods separately. This particular activity, these type of things are falling into clause 17(5)(d). That you procure the goods and services separately. In a first instance, it's a turnkey project. You avail the services in the nature of a works contract services. So far as 17(5)(c) is concerned, that was never ever a question before the Supreme Court. Supreme Court was only examining the fact of 17(5)(d). So if your client has availed a works contract services turnkey, then the question was not there before the Supreme Court, credit is not eligible. But so far as 17(5)(d), if your client has availed the goods and services separately and the resultant thing is immovable property building, then Supreme Court said that 2 things. Clause C refers to plant and machinery. Clause D refers to plant or machinery. So these 2 things are different. And since whatever is the resultant immovable property, if we can say that it is a plant, and they adopted a broader meaning of the plant, relying on some income tax judgments and all, so there the credit is eligible. Now, so far as this plant or machinery, plant and machinery, Finance Bill 2025 has proposed a retrospective amendment to change it to plant and machinery. So both the clauses 17.5C and 17.5D to this extent now in line with each other. So there is no leeway now. But so far as clause D is concerned, Supreme Court said that clause D also have a phrase which says that it should not be on own account. So when this building can be considered as a use for on own account is you are using that immovable property for your own goods. Like I am constructing a factory, I am purchasing cement separately, I am purchasing services from L&T separately, I have constructed the factory building and then factory building will be used for my taxable supplies. So I am using it on my own account. So now the credit will not be eligible to me after this amendment is taking place. And as per the news item, this today perhaps the finance bill was to be discussed and today it may become the act also, but the provision will be made effective subsequently. So far as the own account is concerned, Supreme Court has said that, let's take an example, I am purchasing the cement separately, I am purchasing the services from L&T separately and constructing the godown, and godown I will be giving on rent to others. According to Supreme Court, this building is not used on own account. Because I will be giving it to rent to somebody, somebody will be using that building. Today, even after this retrospective amendment, proposed retrospective amendment, you can take the credit. If you are a supplier of service in the nature of renting service, you can take the credit. Okay? This own account amendment is still not there. So you will be falling into 17.5D exclusion clause if it is used on own account. If you are not using on an own account, then this retrospective amendment is not touching you. So you can still take the credit. So that's the difference between these two. Maybe they have reserved this amendment for Finance Bill 2026, we don't know. The next year they get. But today, if your client is asking you a question that I am procuring the goods separately, procuring the services separately, and constructing a godown which I will be giving on a rent to others, then, and he is asking that whether I can take this credit or not, then your answer should be yes, you can take the credit. Because that is not touched by this amendment. So still you are saved so far as this is concerned. So that's the point in this question. Hotel, sir, it will be a very debatable question. I would not say, you can argue that hotel is also the same thing like I am constructing the hotel, ultimately I will be giving this room on rent. But in a hotel's case, revenue can argue which slightly factually different also. He will say that you are there, you are occupying the building. In a renting case, what happens, sir? You are handing over the building to somebody, like in a renting. So he comes into there, you go out. In a hotel, it does not happen. You can argue, but it will be a debatable case. That's what my answer is. Yes. If you say that I have a hotel building is constructed, and then let's say I have constructed the hotel building, procuring goods and services separately, and then I am giving it to Taj Hotels for their use or renting, I can take the credit. Now your question, we can slightly twist the fact. Like on a first year, you have given this on a rent. On a subsequent year, you want to use for your own account. Whether you can still get the credit, because on a first year, when you have intended to give it on a rent, so at that point of time you are eligible, but subsequently you become ineligible. But at the time when you avail the input tax credit, you were eligible, right? And subsequently you may become ineligible. So whether the credit can be disputed or not. These type of issues have been tested in court in case of Senate credit rules, where what used to happen that the developer will, let's say, constructing 100 apartments. He avails the input services, credit was allowed to the extent he is paying the service tax. Like 80 apartments are booked before BU permission is granted. So according to the revenue, he can avail the input tax credit, Senate credit up to 80 units. 20 units he has to reverse. So in the case of this Alembic Limited, they avail the credit of 100 units, paid tax on 80. Revenue says that you reverse proportionate to 20 units. Tribunal said that there is no provision in Senate credit rules which requires the SSC to reverse this credit of 20 units. When the matter went to High Court, Revenue filed the appeal before the High Court. High Court has observed State has not observed, tribunal has not observed this proposition, but High Court observed the eligibility of the input tax credit is to be seen at the time of receipt of the services. So let's say on a first year, you have constructed the building by procuring the goods and services separately, and the first year you have an agreement with Taj Hotels to use that building for Taj Hotel purposes. It's not your own account. But on a second year, you yourself enter into the property and you run the hotel in your own brand. But since on a first year you were eligible to claim input tax credit, at the time of receipt of the input services, you can still avail that benefit of input tax credit. That's the answer.
Thank you, Jigar Bhai. Now the next poser is related to a plotting scheme. It is a large plotting scheme. It is developed in a two-phase. Phase 1 completed before even introduction of GST, and phase 2 started after GST. In phase 1, even today they have some units or plots which are unsold and they are selling it today. So their first question is, are they liable to pay the GST on the plots in a phase 1 which is actually developed even before introduction of a GST? So I think everybody in this hall now will agree that if there is a sale of plot and it is an after development, then there is no GST. There is a 47th Council meeting press release which clearly says that if any plot is sold after laying of the pipeline and drainage, etc., in that case, it is nothing but a sale of a land, merely a sale of a land, and hence not subject to GST. Similarly, we have a circular number 177, which is also in the same line, which says that if any plot is sold after some development, laying of pipeline, etc., in that case, it is nothing but it is equivalent to sale of a land, and hence it is covered under the entry 5 of Schedule 3, neither supply of goods nor supply of services. Correct? So whatever the schemes which are already completed before introduction of a GST, and there is no further development thereafter, I don't think there shall be any liability for the payment of a GST, even if such a plots are sold today. Now I am coming to another one. I will also like to draw that attention towards that Munjal Bhatt's judgment, which is clearly says that if the plots are already developed, then there cannot be the liability to pay the GST thereon. Correct? So now we have settled position of the law. Even council has accepted. We have a circular. No issues. Now coming to the phase 2. Now what happens in phase 2 is still under development, and if a promoter accepts any booking before the completion of entire development, what will happen? If we will go through that both the circulars and a press release, it says that after development. It don't talk about the developed plot, or what if plot is sold during the development and process is undergoing on. So to that extent, circular and that press release may not help us. Now, for that particular kind of a situation where the plots are sold during the development or before the development will get completed, we need to go back to the law decided by the courts. Now it is a well settled principle, K. Raheja and L&T everywhere. When a promoter is doing the construction on behest of somebody else after an agreement, in that case he is providing the services or supplying the services. Till the time he accepts the booking or enter into an agreement with the prospective buyer, whatever he is constructing on his own. But the moment he accepts any booking or enter into an agreement for construction, in that case, he is providing the services or he is doing the construction on behest of somebody else, and that can be subject to GST also. Even if you go to the Munjal Bhatt judgment, para number 89, para number 121, both clearly says that, Pardiwala sir clearly stated that if the plots are under development, such a case is not before us and it may be subject to GST. Correct? K. Raheja is also upheld by the Supreme Court in L&T, which says that if a booking is accepted before the completion, in that case, that particular portion may be subject to GST. So yes, question is open for an interpretation. It can be argued that if before completion of a development, if any plot is sold, there can be some element of a supply of services and it may be subject to service tax, subject to GST. Now we have Karnataka Godrej Properties Limited advance ruling in GST, which says that if it is a sold, even during the completion, during the development or before the development, then also it is not subject to GST. And that advance ruling is heavily relied on that both the circulars I discussed. So, but I personally don't believe, or I will not like to go with that. Particularly, we have issues kept open by the courts. So I think still that issue is still open, and I think that can be subject to levy of a tax if plotting is sold before the development. I am not saying that entire plotting will be taxable. If only part of the land cannot be taxed, that part of the land cannot be subject to GST. Only value pertaining to the construction can be subject to GST. I think my friend want to add something. Now what if the tax is payable, correct? Now, so there is a doubt if tax is payable. I think everybody, if anybody of you have a difference of opinion, okay. So if suppose tax is payable, in that case, what shall we do? What shall be our advice? In that case, it is highly advisable that you separate the value of a construction from the plot. You pay the tax at 18% thereof, and you can take the credit for the development of whatever development expenditure you are doing. So practically, there will be no any cash flow or additional of a cost if you are taking this route. So this way you can safeguard your clients and avoid any future litigation, which is, I think, this issue is still open for discussion.
I was just suggesting Punit Bhai that when we were settling down, so we were just looking at, we are sitting on our own seat. So we are checking that I am sitting before my name only. Then I told him that change in the seat will not be a problem, change in the posers will be a problem. So he is dealing with his poser asking question to us.
Good evening. Thank you, Punit Bhai. So my poser is related to, this mandatory provision that is going to come from 1st of April 2025, ISD versus cross charge. So that is the, a discussion, long time discussion that something that is ISD, something that is cross charge, whether it can be interchangeably used. So I'll just break down this poser into three parts. First part discusses about the mandatory provision of cross ISD provisions and certain expenditures, state specific expenditure done by the head office. So head office is in Mumbai and it's having its branch office in Delhi and Bangalore, and certain expenses, state specific expenses are being taken care of by the head office. Second scenario or second part of the poser is regarding this. Head office is having multiple branches and it's taking care of this administrative operations like managing payroll and employee benefits, etc. So it's basically something that is in internally generated services that we are talking about. Basically I've broken down this poser into the keeping in mind the circular that was issued for the ISD purposes. And I'll just refer to the circular number. Circular number 199, 11/2023, dated 17 July 2023. And third part of the poser is regarding the externally procured services like IT infrastructure services or licenses services, something like that. For that sake, consultancy services. So externally generated services, right? So now, keeping in this mind, this particular scenario, the input service distributor concept was there in erstwhile regime, service tax regime as well. And it was defined in a manner in which it said that, I'll just read out that, it means an office of the supplier of goods or services or both which receives tax invoice and it issues a prescribed document for the purpose of distributing the credit. Now that definition was carried up in GST regime as well, and now from the 1st of April 2025, they have changed the definition. That is point number one. That is very important to note over here. Before that, there was the huge discussion that whether cross-charge and ISD can be interchangeably used or not, whether I am doing cross-charge, then whether I need an ISD registration or not. So for that sake, somewhere in 2019, they issued a draft circular, a very detailed draft circular wherein certain situations were described. So I'll just pick on the two different scenarios or two different examples, and then we can discuss. Head office is paying the bill to a security agency, and security agency is actually putting his his security personnel at the branches. So that is the one scenario that was discussed. And another scenario was that software services that is being used by the entire company and for which payment is being done by the head office. So and of course third one, that internally generated services, person, employee of an head office doing certain work for the branches, so that internally generated services. So that were detailed discussed in the circular that was supposed to be issued somewhere in 2019, but it was not issued. Thankfully, it was not issued. And after that, this circular that I am referring to is 2023 circular. It settled down the entire thing. In circular, it was mentioned that not necessary ISD is mandatory. You can use interchangeably. If you're not passed on the credit through an ISD mechanism, you can do the cross charge. It also referred to, one of the most good provisions in GST is proviso to Rule 28, which says that if there is a transaction between related party and distinct persons, there is no zero value can also be adopted, and if complete credit is available, full credit is eligible towards the recipient end. So that is one of the most positive provisions that we are looking for, and it was liberally used in this particular circular. So according to me, this issue got settled somewhere in 2023 about doing compulsory making ISD, whether interchangeably can be used or not. It got settled, but somewhere now it is getting unsettled. As I said, that the important part is the definition that has been changed. The definition, it reads like that, and what the word that I want to stress upon is that input service distributor means an office of supplier of goods or services or both which receives tax invoice towards the receipt of input services for and on behalf of distinct person referred in section 25, and then it says that it is liable to distribute. So first thing is that it is mandating that after 1st of April 2025, whatever expenditure, whatever input tax credit you identify as a common input tax credit, you need to, you shall, as an head office, you are required to, pass on those credits by way of ISD mechanism. Okay. So mandating this means you cannot now interchangeably use ISD and cross charge. But what importantly that say that on behalf of distinct person. Now, here, I would just briefly like to discuss the concept of privity of contract. And because in GST, we are looking at branches and head offices as different persons, distinct persons. And when, as a third party contractor, if I am going into, entering into a contract or agreement with an head office, for me, he is the service recipient, because we are having the definition of service recipient. So service recipient being the person who is liable to make the payment, right? So for example, a consultancy services. A consultancy services, I'm entering into for a statutory auditor. Statutory auditor is obviously entering into agreement with the head office. So can we say that statutory auditor is providing services to the branches, and for that sake, head office is making the payment on behalf of the branch? We cannot say, right? So for all type of that internally generated, or maybe not for internally generated, but for all third-party services that we are looking at, I can still say that the new definition does not cover exactly the scenario that we are looking at. I mean, the circular clearly said that internally generated services, cross-charge, externally, received services, procured services, ISD. That was a bit clear, and it can be interchangeably used. That liberty was also given. But now it want to, fix into a watertight compartment that all the internally generated services, you need to cross-charge. Other than those, you need to compulsory pass on through ISD credit. Now, again referring to the definition, the first example that I took, that security agency services, providing services to the branch and issuing the invoices to the HO, I can understand that this type of scenario can exactly fix into the definition that has been, proposed to introduce from 1st of April 2025. For all other sake, I can very well say and that, look, I am not the service recipient for this, branch is not the service recipient. So all the payment that I am making to third-party vendors are not on behalf of the branches, and hence I am not required to, transfer through ISD credit. This is very, very important, because after mandating this ISD provisions, we are going to face another, type of music from the department that this should have been transferred through ISD, YO cross-charge, and cross-charge, we are having that umbrella of proviso to, Rule 28 saying that 0 is also a value, and if credit is available, then I am out of cross-charge. But again, something that is not transferred by ISD, they may raise a question that you should have transferred by ISD. Something that you have transferred by ISD, they may raise a question that you should not transfer through ISD. So for that, I have two arguments. First, if they say that this should not have been, transferred by ISD, or this should have been transferred by ISD, I'll say that, look, the circular, as of now, it's valid circular. Circular categorically says that whatever internally generated services are there, cross-charge, and cross-charge are having that umbrella of proviso to Rule 28. So that's done and dusted. But third-party procured services, if for that sake some dispute is being raised, then I said that the circular says categorically that for that third-party services, I can charge through, through ISD. I can pass on the credit through ISD, and no need to, look into that recipient angle and all. And if the reverse scenario comes to me and saying that this should not have been transferred by an ISD, I'll just say that, look, the definition says that the service recipient is me, and it is not done on my behalf of any branches, so I am not required to pass on through ISD. So if I look at this mandate, yeah, it seems that it's an additional compliance work, and it's an additional thing that the department may come to us. But if I use both the things, I mean newly introduced definition along with the circular, if I read it along with and use, then I can have an escape from either of situation. Correct. So suggestion would be all internally generated services, you can, transfer the credit through cross-charge in whatever manner you feel so, because I am having that umbrella of proviso. For externally generated service, I may pick and choose, and taking the benefit of this particular, definition that I would try to say, and accordingly that credits can be transferred. But yes, uniformity should be maintained in the manner it should be, charged. The reason that you're taking for one service, that should be applied to other services as well, and accordingly this provisions should be applied. As of now, because now this is going to be, coming in 1st of April 2025. So as of now, we don't know what would be the, arguments or something from the department. But as of now, if we want to make ourselves secure, we have to wisely choose and use this circular vis-a-vis this particular new definition, and accordingly we should take care. Thank you. Yeah. No, it says that IGST credit as IGST. It needs to be read like this, that IGST credit can be transferred at IGST, and if at all, I mean, of course, they have not covered this type of scenario that I am having two branches in the same state. Correct? So that is what we are trying to say, right? So, yeah.
Sir, what I understand from his query.
Correct. So, yeah, I got the point. So, basically, the question that you are trying to say is that I am in Gujarat, my head office is in Gujarat, and my branch is in Maharashtra. I am receiving the IGST credit. I am required to transfer it to Gujarat as well as Maharashtra, right? Because in Gujarat, I will be having two registration, one regular registration and one ISD registration. So, whatever IGST credit I am receiving, I will be receiving in my ISD registration, and then I need to transfer it to Maharashtra. I can transfer it to Maharashtra in IGST, right? Now, in case of Gujarat, I can transfer it CGST plus SGST. It has to be read in that fashion. It says that IGST credit can be transferred as IGST, and IGST credit can be transferred C plus S, and vice versa situation is also there. Because this, if we'll read like that, then this entire mechanism will fail. Yes. So correct. I have to transfer a C plus S. That's how it will work. Otherwise, this mechanism will not work. So and this type of scenario is very common in all the...
You can see subsection 3 of section 20. It says, the credit of central tax shall be distributed as a central tax or integrated tax. And now the relevant part starts for your query. And integrated tax as integrated tax or central tax by way of issue of a document containing the amount of input tax credit in such manner as may be prescribed. So when you have received the service, like say for example, you are availing the banking services from state of Tamil Nadu, and your ISD is receiving in Gujarat, which you need to distribute between Gujarat and Maharashtra. So in Tamil Nadu bank, he will charge IGST to your ISD, and IGST is charged. So far as Maharashtra is concerned, you don't have a problem. You can directly transfer to IGST. You have a problem in Gujarat where you need to distribute. So subsection 3 says integrated tax can be transferred or can be distributed as an integrated tax or a central tax. So both scenarios covered. Yes, you can do that. So similar provision will be there in this SGST.
In SGST it would be mentioned as SGST, IGST and SGST.
So you can do it.
Otherwise this mechanism will not work. Yeah.
And they are having exhibition at Delhi. This head office is having multiple branches in multiple states. Now they are participating in exhibition and they are providing supply, space provision. The stall is provided
In Delhi.
So the invoice will be raised by that exhibition conductor, and he is raising invoice to the head office Gujarat. So whether the BOS will be considered, and if BOS will be considered, then actually C plus has to be then spent on that.
So that's the actually the ideal scenario wherein ISD mechanism will work. That in that case, if in Delhi I am having registration, I can request that kindly issue the invoice C plus S in Delhi, and in that scenario it can be said that Delhi is actually paying on behalf of head office, and then eventually you have to take ISD registration over then Delhi, and then it can be transferred. So that's the actual.
Sorry to disturb, but if the payment is being done by the Gujarat, they will not charge C and S of Gujarat. It will be subject to IGST. Yes, it is. No. POS is a Gujarat.
So for that sake, if hotel accommodation is
If
there,
the services are provided to the registered recipient for event management services, they will be paying you the event management fees. So it is a IGST transaction, not C&S.
Good evening, everyone. Thank you, Rashmin Bhai. The next poser is in relates to the recently amnesty scheme announced by the Section 128A. Generally, Central GST Authority are passing the order every time in Section 74. As we all know that Section 128A is applicable to the order which were passed under Section 73 only. Here the two DRC 7 order has been passed by the authority for the 1718 and 1819. Both are having a different issues, but the order has been passed under Section 74. Tax has been paid in the first year, that is 1718, and so far as second year is concerned, 1819, wherein the mismatch of ITC issue is concerned, tax has not been paid. In both the years, interest and penalty has not been paid by the posers. Appeal were also filed by the dealer, and in that case pre-deposit has been also paid. Now he wants to take the benefit of the present amnesty scheme. So as to whether he can take the benefit of amnesty scheme or not. So our opinion is that so far as 1718 is concerned, DRC 7 order has been separately passed, though the OIO is common. So no need to go in amnesty scheme so far as 1718 is concerned, because Section 16.5 and 16.6 is there, and the time limit to avail an input tax credit has been extended. So it is advisable to argue in appeal itself, contending that time limit under Section 16.5 and 16.6 is now extended till 31st of November 2021, and therefore, considering circular number 237 para 3.5, the credit has been rightly availed by the respective taxpayer, and therefore, so far as year 1718 is concerned, no need to take a benefit of interest and penalty waiver scheme, and straight away whatever tax payment has been done, that is required to be claimed as a refund by getting a favorable order in appeal so far as 1718 is concerned. The next year is 2018-19, wherein the mismatch of ITC has been the crucial issue, and the order has been passed under Section 74. CA Abhay Bhai has already explained where the order can be passed under Section 74 and 73. So you need, taxpayer needs to establish in appeal that 74 has been wrongly invoked. While passing the order, they have to establish the fraud, willful misstatement and suppression. So looking to the Section 74 proviso to 74:12, that there is no suppression at all, and therefore 74 cannot be invoked. You can also rely on the Delhi High Court judgment, wherein Delhi High Court says that in the case of a mismatch, 74 cannot be invoked. Parity Info Tax 151, Taxman 349, which speaks that for the mismatch of the transaction, 74 cannot be invoked. So when you succeeded in appeal and 74 has been wrongly invoked, if it is concluded, then there are another two options lying with you. Either on the next point, as it has been posed that for the mismatch 7 lakhs demand proof are availing by the taxpayer. Therefore, so far as raised 75,000, if the appeal order got converted into 73, then by paying 75,000 prior to 31st of March 2025, you can in future, after 2 year, 3 year, whatever time appellate authority will take, but the payment of 75,000 must be paid prior to 31st March 2025, and if 75,000 has been paid and in future if you succeeded in appeal in future, then as per the provision to rule 164 sub rule 6, after getting order within 6 months, you can still file SPL 02. When you get a favorable appeal order which held that 74 has been wrongly invoked, secondly that 7 lakhs benefit is allowed to you, and third condition, you have paid 75,000 prior to 31st March 2025. Secondly, if you have a doubt that you can't establish the transaction and still you want to take a benefit, pay 7,75,000 at present, try to succeed it in future, and then you get the benefit, whatever document you are having, and if in rest scenario all the tax has been paid, then again you have to only establish that whatever the rest payment is required to be that has been paid prior to 31st March, and therefore if order is converted into 73 in future, then within 6 months you again make an application under SPL 02 and take the benefit of interest and penalty waiver scheme. Thank you. 2 DRC, it has been mentioned that 2 DRC 7 order has been passed, so it is advisable to file 2 appeal. You need to file 2 separate appeal, though OIO is 1. Now the court is taking stand that prescribed form to pass an order under the law is DRC 7, not OIO. Yes. Payment, the condition to take the benefit of this scheme is to make the payment prior to 31st March, and second, if appeal is required to be withdrawn prior to 31st March as per this provision. Yes. That leverage is not given under the scheme. The notification speaks that if you want to take a benefit of interest and waiver scheme, the tax payment must be done prior to 31st March 2025. The scheme also speaks that wherever in future the order is converted from 74 to 73, then you have a 6-month time to make an application. But so far as condition of a payment which has been prescribed by the separate notification, that has not been mentioned anywhere that you have a leverage that after conversion you can make the payment. That leverage is not given anywhere. Thank you.
Here I will just add, if you refer to notification 21 by 2024, which specifies the due date for making the payment under the scheme, it visualizes 2 situations. One is where presently the order is under 73, where the due date is 31st March, as Samir Bhai rightly says. But where it is a case of 74 and subsequently converted into 73, then you have to make the payment within 6 months from the date of the redetermination order under 73. So date for making the payment and filing the application, both would be 6 months from the date of the redetermination order. Not necessary. That would be my view.
Because today you don't know
Because today-
whether you are eligible or not. Because the proceedings are done 74. Like say for example, after 5 years, tribunal will say that 74 is not sustainable.
Notice is that we have received 74, and we know that this is not the scenario of 74.
So that is why this notification takes care of that practical issue.
So sir, you have a GST tribunal, then High Court, then Supreme Court.
So after the Supreme Court also we get.
So up to 25 years, 128A will continue.
So it's an open-ended scheme.
Still we have to be positive about it.
So now everybody is thinking the scheme is for the benefit or the advocates.
સ્કીમ 74 ની નૈયામાં વધારે ફાયદો કેવો 74 ના તો લોકોને પૈસા ભરી દે અને આ તો 10 વર્ષ પછી 74 કે 73 માં કન્વર્ટ થાય તો 10 વર્ષ ભરવાનો છે વ્યાજ પર તો બાબત છે.
એટલે આપણા ક્લાયન્ટને 74 માં પૈસા ભરાવા નહીં અને વહેલી કન્વર્ટ બી નહીં કરાવી.
ખાલી ફી ભરાઈ જાય.
Right. So poser number 6. Sorry. ના હાલમાં હમણાં 74માં છે એટલે હાલમાં નહીં જઈ શકાય. મોમેન્ટ અપીલેટ ઓથોરિટી આને 73માં કરવાનું કહેશે અને ઓફિસર 73માં નવો ઓર્ડર પસાર કરશે 75(2) પ્રોવિઝનના બેઝ ઉપર. એના 6 મહિનામાં તમે સ્કીમમાં જઈ શકશો વિધિન 6 months ફ્રોમ દેટ ડેટ. Poser number 6. Okay, this is a very common issue in GST. When GST was introduced, it was said that it is one nation, one tax. But then we have assessees who are administratively divided between center and state. થોડા assessees ને સ્ટેટમાં ગયા છે, થોડા assessees સેન્ટરમાં છે under the administrative control. Now it is in that context that taxpayers are practically facing actions from multiple authorities, even within the same authority from multiple departments. And this is the poser to bring out those conceptual issues. This is a company which is facing multiple actions for the same year. Initially the action started by the CGST department. Initially they issued notice for scrutiny of the return under section 61. Then they conducted audit and disallowed certain ITC. Then preventive department issued summons, initiated an inquiry. They alleged that there is some supplier who is indulged in billing activity and therefore that ITC would not be available. Then DGGI stepped in. DGGI also invested and found that there is one supplier where there is a stock difference and therefore they allege that this supplier would not have actually supplied the goods but has given only invoice. Therefore again that ITC is not available. And then state comes in and state says that since there is an exempt supply as part of your returns, therefore certain portion of ITC is not available and therefore now also wants to take action for recovering that ITC. So it is in that context that the law is required to be examined. So principally we are going to deal with two issues. One is center state, that if the taxpayer is administratively assigned to center, as is this case, then can state take the action or vice versa? And second, within the same authority, once the audit is concluded, then can the other wing, preventive or DGGI, can that wing take an action against that taxpayer on that particular issue? So, first of all, let us see what the law says. So, section 6 would be relevant. Section 6(2) B says that where a proper officer under the SGST Act has initiated any proceedings on a subject matter, no proceedings shall be initiated by the proper officer under this Act on the same subject matter. So statutorily there is a bar on exercise of the jurisdiction by the officer of the another department qua subject matter if already a jurisdiction has been assumed by the first department on that issue. Now the word subject matter is not defined in the law. What we understand from the subject matter would be the claims which are made by the taxpayer. So in this context, the entire subject matter deals with input tax credit. In these facts, the central department conducted audit. Now their audit manual itself indicates that under the audit they are supposed to examine the veracity of all the claims of input tax credit which are made by the taxpayer in that particular year. So we have to here in this case say that on that subject matter of ITC, already a jurisdiction has been assumed by the central department when they initiated action against the taxpayer, and therefore on that same subject matter, now state cannot assume jurisdiction by saying that because you have made some exempt supply, therefore we want to also deny or restrict ITC under section 17(2). So that would be first aspect that we have to consider. Second, see this entire bifurcation between center and state, that is not, that legal bar is not there in the law, in the sense that if the taxpayer is administratively assigned to state, then center cannot take any action irrespective of whether the state has taken any action against the taxpayer or not. See, પહેલો આપણે જે સિનારિયો જો એમાં already center has taken action. They have already initiated audit, conducted audit, concluded audit. And now on that same subject matter, the state wants to take action. There under section 6(2)(b), there is a statutory bar on the state not permitting them to take an action against that taxpayer. But now we are talking about a second situation where this taxpayer is administratively assigned to state. In that context, even without state taking any action against the taxpayer, can center take any action against the taxpayer either by way of scrutinizing returns, DGGI, undertaking inquiry, investigation, etc. That is the issue. Now here in law, as we said, section 6(2)(b) only protects the taxpayer if on a particular subject matter action is initiated by one authority. Then the other authority loses the jurisdiction. But without initiating action, can the other authority lose jurisdiction on the ground that it is not administratively assigned to that authority? Now here, the minutes of the GST Council meeting becomes very relevant. If you see the minutes of the 9th GST Council meeting, in para 28, what they are saying that we are dividing the taxpayers between center and state for all administrative purposes. This is the language used in the minutes of the meeting of the GST Council meeting, that for all administrative purposes, that is for all kinds of possible actions under the law, taxpayers are divided between center and state. In the same minutes, they are also saying that enforcement-based action will be permissible, but there is a catch. Enforcement-based action will be permissible only in a situation where there is a chain of transactions which they want to examine. And in that chain, that particular taxpayer is part of that nexus. And in that situation only, if let us say DGGI has already initiated action for fake invoicing and identifies that there is a chain of transactions which have happened across India, then only in that situation the GST Council permitted the other authority to take action against the taxpayer. So it is not just enforcement-based action simply. It is enforcement-based action in a situation where there are chain of transactions, and for the purpose that the authority gets the entire chain visible before them so as to determine the true nature of the transaction. It is in that limited context that the council permitted the other authority to take action against the taxpayer. So common belief that enforcement-based action is permissible, to my mind, is not correct reading the GST Council meeting minutes. Third, this is very important. See, this GST Council, when they took these two decisions of dividing the taxpayer for all administrative purposes and permitting enforcement-based action in a chain of transaction, both those two decisions are part of the GST Council meeting. Now it has to be backed by a notification, because only by way of that notification that action gets the legal validity. So they issued notification 1/2017. This is the notification issued by the GST Council, where they have the decisions which they took in the 9th GST Council meeting were again reiterated in that notification. Most interestingly, para 4 of that notification says that for purpose of empowering cross-empowerment, that is in an enforcement-based situation where the entire chain is to be examined, there the notification says that council will be coming out with a suitable notification to permit that empowerment. This is very important. In that notification, the GST Council recognizes that even cross-empowerment we are going to permit in a certain situation, and that all will be prescribed by way of a notification. Till date, no notification has been issued pursuant to that notification issued by GST Council in 2017. So looking at this, what Madras High Court took a view in the case of Vardhan Infrastructure is that, look, GST Council in the minutes bifurcates the taxpayer between center and state, issues notification to legalize that decision. In that notification, accepts that we are going to issue another notification to prescribe where the enforcement-based action would be available. And in absence of such notification, the action taken by the other government, if the taxpayer is assigned, let us say, to state, then the action taken by the center would be invalid in law and vice versa. Till date, no notification has yet been issued to override or overcome the decision of this High Court. So, on the second aspect, that even if it is not the same subject matter, if the taxpayer is administratively assigned to state, to my mind, looking at the decision of the GST Council followed by the notification, no action can be taken by the other government against that taxpayer. That is second. Third, see, in this case, the facts are that audit has been concluded by the central department. Now, this has a lot of significance. Recently, Orissa High Court in the case of Bipin Agarwal, 2025 EIL 192, takes a view that if the audit has been concluded by the central department, then all authorities, including the DGGI of the same department, loses jurisdiction to determine any credit which has been shortly availed or wrongly availed. Because audit assumes that the verification for that financial year has been thoroughly done, and basis that the audit findings have been communicated to the taxpayer. So in that context, the Orissa High Court says that in that situation, we cannot visualize a case where that same taxpayer is again put to scrutiny by the same department or the other department for the purpose of claims which have already been audited and concluded by the authority. Because in that case, what happens? The High Court notes that in that case, what is ultimately happening is that in a way government is saying that our audit team is incompetent to examine all the claims, and therefore post-audit for the same year there is another authority who is also going to assume jurisdiction and again re-examine the claims and accordingly take action under 73 or 74. So that Orissa High Court says is not what is looking at the scheme by which these taxpayers were administratively divided and basis which the powers have been given to the respective authorities to take action. So it is a very interesting issue. It will develop in times to come because ultimately Supreme Court will have to have a final word on all these three aspects: subject matter, center state, if the authorities have been assigned, then can the other government take action against the taxpayer, and third, that once audit has been concluded, then for that same financial year, can the action be again taken against that particular taxpayer? So these two judgments I think are important, Vardhan Infra and Bipin Agarwal, and I think we already covered the issue.
Thank you.
I have one case, the DGJ Bombay has started inquiry for the supply of food, for the supply for the issue of bill without supply of food. They have started the currently conference. They have jointly hearing also done.
Right.
So they have passed the DGJ, passed the order, one order in 22 persons. And now there is a State Department and Central, the DGJ Bombay, both have issued DRC 07 for the same penalty figure. So
that is invalid under 6(2)(b) because once on that subject matter, center has assumed jurisdiction.
both have passed the issued demand notice on same order.
So first action would be valid, second action would be invalid.
Same day he has.
So second action would be invalid. In fact, we are coming across cases where action is taken by center. We bring this, પછી અમે આ સ્ટેટના ધ્યાને લાવીએ કે સાહેબ આ ઓલરેડી સેન્ટરે આઈટીસી રિકવરીની નોટિસ આપી દીધી છે, તો સ્ટેટ લખે છે એના ઓર્ડરમાં ઇસ્યુ કરતી વખતે કે આ સબમિશન સ્વીકારતા નથી કારણ કે સેન્ટર વ્યવસ્થિત ચકાસણી કરતા નથી, અમારી ચકાસણી બાકી હોય છે, એના માટે અમારો ઓર્ડર આના ઉપર પ્રિવેલ થશે, આવું લખીને ઓર્ડર ઇસ્યુ કરેલા છે. બંને જતા રહ્યા આવા કેસમાં, તો એ લોકોને લડવું પડે કોર્ટમાં આવીને પહેલાં. they have to first decide કે who is right and who is wrong, પછી આપણો વારો આવે કહેવા.
So the seventh poser, relatively simple.
હવે તમે આ જ્યુરિસ્ડિક્શનનો ગ્રાઉન્ડ લઈ લો ને. આજે આ બિપિન અગરવાલનું જજમેન્ટ છે 2025 VIL 192. આ ગ્રાઉન્ડ લો ને તમે અત્યારે કે આ એક્શન તમારી ઓલરેડી એડીટી આ ઓડિટ રિપોર્ટ આની કોપી એટેચ કરી દો કે આ વર્ષનું ઓડિટ કન્ક્લુડ થઈ ગયું છે, સ્ટેટે ઓલરેડી કન્ક્લુડ કરેલું છે, બધા ક્લેમ ચકાસણી લીધેલા છે. હવે આ જજમેન્ટ અને GST કાઉન્સિલની મિનિટ્સ અને નોટિફિકેશનના આધારે નોટિફિકેશન વગર સેન્ટર હવે એ વર્ષ માટે કોઈ એક્શન આ ટેક્સ પેયર વતી લઈ ના શકે. હા, એટલે એમાં પછી આ ઓરિસ્સા હાઈકોર્ટનું જજમેન્ટ તમને કામમાં લાગશે કે એકવાર ઓડિટ થઈ ગયું હોય પછી સેમ ગવર્મેન્ટનું બીજું ડિપાર્ટમેન્ટ સેમ સબ્જેક્ટ મેટરના અંગે નવી એક્શન ફરીથી ચાલુ ના કરી શકે. હા, એક્શન ચાલુ કરી દીધી એટલે ASMT 12 ઇસ્યુ થઈ ગયું છે. હા, તો પછી ક્લિયર છે.
Seventh poser, relatively simpler, is due to some commercial reasons. What happens? You set up a captive general power plant, let's say out away from the factory. Nowadays, solar power plant are also being set up away from the factory. Windmills are quite a since long. Windmills are being set up. What happens? You generate the electricity there. Electricity is goods. But because of its nature, it cannot be stored. So it has to be immediately transmitted. So what happens? The government has agreed, they have lines for transmission and distribution of electricity. Let's say you generate the electricity in Kutch through a windmill or a solar power plant, and your factory is in Ahmedabad. So electricity generated in Kutch is given to grid only for the purpose of transmission to your factory in Ahmedabad. But there will be some loss during the transmission. So they say that if you give me 100 units, then the transmission utility says that I will give you credit of 96 units in your factory. So if you have used 96 units in your factory for manufacture of a taxable goods which you supply, so to the extent of that 96 units, credit will be given to you. So it is called as a captive power plant. Many people generate electricity through windmill, solar power plant, and they sell it also. As I said, electricity is otherwise an exempt supply. If you sell electricity, then you are making a supply of exempted goods. You are not eligible to claim input tax credit. But that issue is also debatable, because there is no parallel provision in GST law like Rule 6(1) of the Senvet credit rules, that to the extent you are using the services for totally exempted supply, whether in a first place you can take the credit or not, but we are not on that issue. Okay. So what happens if you sell, then you cannot take the credit. But if you ask the grid to transfer that to your factory for a captive consumption, then issue arose whether you can take the credit or not. These are all plant and machinery. Therefore, the bar of immovable property construction, as we saw in 17(5) C and D, will not apply in this case, because both the clauses have an exclusion that if something in the nature of immovable property emerges, but you can call it as a plant and machinery, then you can still take the credit. So without doubt, this is a plant and machinery. Now, you give in one of the advance ruling, recent advance ruling of 2025, Kanishk Steel Industries AAR in Tamil Nadu, they have taken a stand that the moment there also the captive power plant was situated away from the factory. He was giving this to the grid for transmission to the factory. So he said that you are giving it to the grid, therefore it is a supply of exempt product, therefore you cannot avail the input tax credit. A totally incorrect decision, for the reason that the manufacturer, the electricity generated is given to the grid only for the purpose of transmission. It is not sold. So the AAR proceeds on a incorrect fact or incorrect understanding. But so far as this type of structures are concerned, captive power plants are concerned, solar power plant, windmill, you will get the credit. Okay. In our Gujarat Authority of Advance Ruling as in 2024, in a unique welding products, 2024 VIL 07 AAR has already taken a view that the captive electricity generated is given to the grid only for the purpose of transmission to the factory. And it is not sold as such. It's not a supply of any exempted goods. And therefore, credit cannot be disallowed. So in our Gujarat AR, they have already taken a view. But now because this Tamil Nadu has taken a different view, it may generate some litigation. But so far as in Senvet credit rules are concerned, Bombay High Court and C-State larger bench has already held in favor of the SSE that even if the captive power plant is situated away from the factory, it does not mean that the input tax credit is not eligible. So input tax credit is eligible. Now, there is one interesting judgment of the Supreme Court on this aspect of movable and immovable. The issue before the Supreme Court was this telecommunication tower, whether they are movable or immovable. So there was a judgment of Bharti Airtel, Bombay High Court, which says that the towers are immovable. What happens? That to transmit the signals are transmitted by the antenna. Now antenna has to be mounted on a certain height so that it can transmit the signals. So telecommunication company, if you look at any telecommunication tower, you will find that on the top of the tower, there are antenna fixed, installed. So that works as a transmission for the signals. Bombay High Court said that these telecommunication towers are immovable. What the credit is available of inputs and capital goods, when the word goods is there, it should be movable. And since it becomes fastened to the earth in an immovable nature, credit would not be available. Then the similar matter, Delhi High Court in case of Vodafone Mobile took a totally different view and said that if suppose all these things can be dismantled and without causing a substantial damage to the towers, it can be installed at somewhere else, then it is movable in nature. Delhi High Court's view concurred by the Supreme Court. So Supreme Court said that the telecommunication towers are otherwise movable in nature. So that principle you can apply to this. Like a solar power. What happens, the concrete base is there, but you can dismantle it without causing a substantial damage and you can get it installed somewhere else. So this is otherwise movable in nature. So therefore that question of immobility should not come into picture at all. So it is movable. So in both this aspect, 17.5 and D will not apply because it's plant and machinery. Whatever the electricity units are generated is given to grid only for the purpose of transmission to the factory. It is not supplied. Ownership remains with the person who has captively is generated from the plant, and it is movable in nature. Therefore, credit should be available in all these cases. Installation, repair and maintenance, everything. All the credits will be eligible to the person to the extent it is used for supply of taxable goods and services.
Department now, I know that it started. It is a case of 17.2. Is the exempt supply?
Correct. It's not exempt supply. It's only for the transmission. Sir, the activity done by transmission company is only to transmit from generation to your factory. It's not a supply.
They are saying
Yeah, sir, if you, all this, no, sir, that's an incorrect view. If you look at the agreement, it's only for the purpose of transmission. It is not for supply. Our Gujarat AR has taken note of that. So, yeah, unique welding, that's it. So, Tamil Nadu AR is incorrect, sir. That is incorrect. Credit should be available.
One more thing I want to add.
So that in that case, what used to happen, he was partially supplied to, electricity was supplied partially. So 100 units generated, 80 units is used within the factory, 20 supplied to other entities. There the Supreme Court has said that to the extent you have supplied to other entities is a supply of electricity, to that extent you cannot take the credit. Yes. So there is no question of supply. So if you are giving to grid only for the transmission, you can take the credit.
Especially the electricity company are charging you wheeling charges. This will called is a wheeling. So they are charging.
Basically, they are charging transmission and distribution of electricity otherwise GST free, exempted.
That is the matter.
Correct. They are only, yes.
If the electricity company do not charge anything, then it can be still said as a barter, like transportation of goods. We pay freight to the transporter. Here for transmission, we pay wheeling charges to the electricity company, and therefore electricity will supply to the grid. It is not a supply under the GST.
Only given to him for transmission, that's all. Nothing else. So definitely you will get the credit. Sir, if you are selling in open market, then sir, that may be, sir, yes, you are right, but in that case what happens, that you are transferring to the grid for onward sale. No, there you are only giving him for transmission to a factory. You are not charging any consideration or supply of electricity. You are only asking him to transmit to your factory. You are not getting money for the units you have generated. When you are supplying the units, electricity generated, then you are getting the consideration on the basis of the per unit of electricity you supply. That is transferred to grid only, always, sir. But the purpose is different. When you are supplying, you are giving to grid for onward sale. When you are generating and you ask the transmission utility to transfer it to your factory, then you are not supplying the electricity. You are only asking him to provide the transmission services. Open market credit will not be available, sir. If you are selling in open market, credit will not be available. Or if you want to come to any one of us, then you can take the credit and come.
સાહેબ ઇલેક્ટ્રિસિટીનું ટ્રેડિંગ થાય છે સ્ટોક એક્સચેન્જની જેમ એનું બી એક્સચેન્જ છે ઓપન માર્કેટમાં વેચાય છે એ બી ગ્રીડ થ્રુ જ થાય. હા એટલે ગ્રીડ થ્રુ એટલે ઓપન માર્કેટ નહીં એવું નહીં. ઓપન માર્કેટ પણ ગ્રીડ થ્રુ થાય, તમારું પર્સનલ ટ્રાન્સમિશન પણ ગ્રીડ થ્રુ થાય. એવું એ બે વચ્ચે ફરક નથી. ઓકે, આઈ એમ કમિંગ ટુ માય નેક્સ્ટ ક્વેશ્ચન. કોણ કયો ક્વેશ્ચન લેશે એ અમારી મિટિંગ હતી, એમાં હું 10 મિનિટ મોડો પડ્યો એટલે બધા જ કન્સ્ટ્રક્શનના સવાલ મને આપી દીધા હતા. એટલે હું જ્યારે જોઈન થયો તો મને ડિસાઇડ કરી દીધું હતું કે ભાઈ કન્સ્ટ્રક્શનના તમે લઈ લેજો. હા, મારી એસેટ મારી પાસે. હા, એ લાસ્ટ ટાઈમ હા, પણ આમાં જો પહેલો સવાલ હતો એ દેસાઈ એન્ડ કંપની. First question was A. Desai and Company. Now second question is S. Samir Siddhapuria Buildcon. Now you are saying that I am holding this. Okay, second question. 8th number, that Samsid Buildwell. What has happened is builder has a scheme of 20 bungalows. Out of 20, 19 are already completed. 20th is also completed, but in a one room there is some problem in electricity. So unless that problem is solved, BU permission for entire scheme for all 20 units will not be granted, correct? So first of all they have to solve it. So after completion of all 19 units, just before the BU permission received, somebody came, he booked the one bungalow number 1, which was completed in all respect. But BU permission was not received. So he came for a booking. So now according to the law, if a single rupees is received before BU permission or a completion certificate, entire transaction will be subject to GST and GST is required to be paid. Okay. So law is very correct. Law says that 20 નંબરના બંગલામાં કોકનું ઇલેક્ટ્રિકનું કામ બાકી હતું, એટલા માટે 1 નંબરના બંગલાવાળાએ 5% GST આપવો પડશે. Is it reasonable? No. But law is like that. So what can be the argument? Correct? Now let me go back to my first questions when I said that it is a well settled principle that started with the Dunkley and L&T, K. Raheja, everywhere. When a promoter or a builder is constructing without any agreement or without any booking, he is doing the construction for his own. Correct? When he is accepting the booking during the construction, when he is in that case, after that date, he is constructing on behalf of or on behest of the buyer, proposed buyer. So now, stretching this argument further, what I am saying is, when a buyer of a first number 1 bungalow came, whatever development or construction was required to be done was already completed. And after that date, promoter has constructed nothing for the buyer. Whatever construction was required to be done was already done before the buyer came. Correct? So now, if you go back to Larsen and Toubro 2013, there is one clear paragraph. Supreme Court says that when the buyer comes before development, definitely thereafter promoter is constructing on behest of the prospective buyer, and only value added thereafter shall be subject to sales tax. Very categorically, Supreme Court says that suppose 90% of construction is already completed and only 10% was pending. So only to that extent it is a works contract, and only to that extent for 90% builder has provided services to self, and for 10% only builder has provided services to the buyer. So only that value shall be taxed. L&T 2013 Supreme Court. K. Raheja also confirmed. Now coming to the Munjal Bhatt. In Munjal Bhatt also Pardiwala sir specifically noted that if any factum of a supply is there, it should be there only from the date of an agreement. So it is opening an entirely a Pandora's box. So whatever the value addition after the agreement, that only shall be considered for the purpose of a levy of indirect taxes. And before that, whatever an value addition is already done is nothing but merely a transfer of an immovable property. It cannot be taxed. So this is an argument which I think can be taken, and I think it will pass through all the courts. This is what I understand, because law is very categorically clear for 70 years. Gannon Dunkerley, same principle. L&T 2013, same principle. Again in 2022, Munjal Bhatt, same principle. So this is my view. Yes, bungalow number 1, if you are able to prove that there is no value addition, even if BU was pending, in that case, when that buyer came and on that date, no construction was pending, nothing is value added to that value, nothing is added to the value. In that case, no tax shall be payable on bungalow number 1, even if BU permission is pending. Thank you.
So this poser uses the word completion certificate. The word completion certificate and BU permission are two different documents. Abhay has long back done very good research on this, that completion certificate can be obtained by in-house engineer. BU permission is granted by the municipal authorities. The completion certificate and BU permission are two different documents. What the law said is a completion certificate. They are not talking about the BU permission. What is the difference? Abhay has done long back, he has done this research. I hope he will supply to all of you, because since this evening he is dealing with some heavy topics of this eligibility of the credit and all. So, like I said, when this client came, he said that sir, so many notices, adjudication, who will track off all these things. So I said we will discuss this little later, but first you tell me that what do you supply? Then he said that invoice. So these are all bound to happen.
Thank you.
So just adding to whatever Punit Bhai said, that completion certificate, and there is one more phrase that has been used, or after his first occupation, whichever is earlier. So yeah, so for that sake, I can use that phrase as well, even though I have not received the completion certificate, and say that GST shall not be applicable. Anyways. This case study is regarding the corporate guarantee. Corporate guarantee came into picture somewhere in 2022, and after that department started issuing the notices, and after that they realized that we need to address this particular issue, and somewhere in 2023 they issued a circular stating that, or rather an valuation mechanism stating that in case of corporate guarantee, 1% of the guarantee amount should be considered as a value of supply that has been given, and accordingly tax must be charged. Going into the background, in erstwhile law, service tax, there was of course, in that scenario also, department raised this particular issue, but it was settled down somewhere at tribunal level. In Sterlite Industries said that no service tax can be collected on the corporate guarantee. Now the basic distinction between service tax law and GST law is that service tax law solely dependent on the consideration being received. Of course, in GST also we are looking at the consideration, but in certain transactions, Schedule 1 transaction, there is no necessity of consideration. So distinct person, related person, there is no requirement of consideration. That way it is distinct or different than the erstwhile law, and that's where it comes into play. So, the primary question is that whether GST will be applicable on corporate guarantee or not. If at all applicable, then from which date it will be applicable, because they introduced the valuation mechanism somewhere in 2023. So, what should be the answer for the period prior to that? There can be an argument, there is a very celebrated judgment of B.C. Srinivasa Setty said that if there is no valuation mechanism, there is no levy. I mean, the levy fails, mechanism fails, then levy fails, and there can be no tax in that scenario. But again, that solely depends on that consideration part and valuation part. In GST, we are having a lot of residual, provisos, residual sections, residual, mechanisms that has been given. So, in valuation rules, there was always a residual mechanism, correct? So, I cannot go and argue that before 26th of October 2023, when you said that GST will be levied on 1% of the corporate guarantee amount, because before that you have not said that 1% was not there, so I will not pay GST, because at that point of time there was some residual machinery provisions available with you for the valuation purpose. Of course I can argue, but I'm just playing the devil's advocate. So before that particular date, and of course department is raising the notices on certain open market value, or some they contact with the banks and say that if there is no corporate guarantee, what should be your rate of interest, and accordingly they're raising the notices. That can also be challenged. But of course there was a residual mechanism. So before 26th of October also there can be implication of GST on the corporate guarantee. Second thing, it is being asked that if at all 1% is levied, can we say that 1% is the full and final amount that can be adopted for the payment of tax on the corporate guarantee? There is again a term that has been used, that actual consideration charge. So I can play around the words and say that this is an actual consideration, because see, for the purpose of corporate guarantee you cannot go into the open market and say that this is the open market value available. I'm into business of giving a corporate guarantee, so I don't have that comparable method. So whatever I have given, it should be agreed. And this circular goes beyond that. And for the first time, in GST law, it has been said that zero is also a value. Correct. So this is a very, very important thing. That, I mean, in cases where credit is being received, I mean, fully credits, I'm eligible at the receiver's end. This is very, very important, saying that, and this can be applied across. I mean, zero is a value, it can be applied anywhere else as well. Second that was asked was that multiple companies giving corporate guarantee to a single entity. In that case, what should be the mechanism? So this has been, clearly addressed, that if there is some ratio being given, then that ratio needs to be adopted, or equal ratio on that basis. So for example, 100 rupees corporate guarantee is there, and three companies are giving 100 rupees corporate guarantee, combined to to the company who is receiving, then it does not mean that 300 crore corporate guarantee is there. It should be distributed in the equal ratio or somewhere in that particular case. Last part is regarding the personal guarantee. I mean, of course, there was a question regarding a director giving the personal guarantee, but that they have addressed in this circular as well, that personal guarantee no need to be pay GST on that. And so far as circular is beneficial to me, I am not going to argue about it that in corporate guarantee you are saying the tax is payable, in personal guarantee you are saying the tax is not payable. I am not going to argue in that. If it is beneficial to me, I'll adopt that. The last portion is regarding the cross-border corporate guarantees. So again, Indian company giving guarantee to somewhere outside India, of course, I need to, value it somewhere and show it as zero rated transactions. Of course, I don't need to, as the circular said that zero can also be adopted, so, but just for the sake of making a documentation, the sake of keeping a record, and for the sake of argument, I can create a sort of documentation. But in case of reverse scenario, again, in case of reverse scenario, this will be benefited to me that if I am receiving the entire credit, then zero will be adopted as the balance. Now, when I'm talking about this, zero being adopted, second proviso to Rule 28, somewhere it lands up in the, concept of revenue neutrality. I'm sure one more, poser is there regarding reverse charge, ITC availability of reverse charge payment. So somewhere you can relate with the revenue neutrality concept. Of course, it is not being, spoken out loud, but somewhere if you look at this type of evolvement in the law by way of the circulars or the clarification that is being given, we are slowly and steadily going towards that revenue. Of course, it was there, but it was not spoken out loud. So that revenue neutrality will always help. And as Abhay said in this first thing, that Section 74 is being used at their own whims and fancies, but actually it has to be used in a very selective cases. To my mind, all the cases are of 73, and if at all you can point out the definition of suppression, intention to it, then also 74 comes into play. So revenue neutrality is very much important, and in this particular scenario and in other scenario also, this type of this analogy can be drawn that has been presented in this circular.
The next question relates to the e-way bill transaction, which were the routine transaction of the trader. Basically, trader is based at Gujarat and his supplier is based at Madhya Pradesh, Indore. He posed a query that though he is not having a registration in MP, Madhya Pradesh, whether he can make a ship from Indore by generating e-way bill or not, showing the supplier go down as the dispatch place. And further he has pointed out that if the transaction were between A, B, C, D, so 4 leg of transaction are there, then how much e-way bill is required to be generated in this type of a chain of the transaction. And the taxpayer have a query that if in such type of a transaction, is there any legal compliances or is there any legal risk is there or not? So first of all, when the transaction has been occurred and Gujarat taxpayer is purchasing from the Madhya Pradesh supplier, then he can definitely show the dispatch place as the suppliers go down. By showing that, he has to, while generating the e-way bill, he has to mention ship from address is the supplier's warehouse. By showing that, what he wants to hide the identity of the supplier. But while doing so, Gujarat buyer has to ensure that Madhya Pradesh supplier where he is having a go down, that place has been registered under the GST Act, under the Madhya Pradesh Act and the Central GST CGST Act. In nutshell, supplier of the Madhya Pradesh must have the warehouse place as an additional place of business in his registration. By showing that, he can mention the supplier go down as a dispatch from address in the e-way bill, and he can make a further sale to his Gujarat buyer can make a further sale to his buyer. That's the query to the first poser. Then the second poser is that in how much e-way bill were required to be generated in this type of transaction. There two
e-way bill માં આવા પ્રોબ્લેમ થાય જ છે.
The first e-way bill is required to be generated from A to B, and the second e-way bill is required to be generated showing the B to C to D. In this transaction, the C will generate generate the another e-way bill for the movement of goods from their location or the supplier location, as in the first scenario, and 2D as per the C instruction. So only two e-way bill is required to be generated in this type of transaction. Thank you.
Poser number 11. Basically, this is again a very common issue. This is a common issue.
It's because of my mic. I'll just like to interrupt for a second. We have an announcement to make. Ladies and gentlemen, the QR code for the registration.
I hope you will go after this session. So poser number 11, basically, see, this is a practical issue. All our clients are busy looking at their mobile phones, WhatsApp, Facebook, LinkedIn and Instagram, but they are not looking at the GST portal. And officers are passing notices, issuing orders on the portal. And when they receive recovery notice, then they realize that something is there. Then they check the portal and they find that there are orders which are passed. So in this particular case, this happened in Uttar Pradesh, where the state authorities had passed the orders for 17, 18, 18, 19. These are all orders based on the scrutiny of the returns, where they identify the differences between 1 versus 3B, 3B versus 2A, e-way bill data, all of that. And basis that, the demands have been created. Now all these orders are like, in this case 17, 18, it is of 31st December 23, and 18, 19, it is of 30th April 24. Now the question is, what is the remedy available? Because regular remedy is not available in terms of filing the appeal, because under section 107, subsection 1, the limitation to file the appeal is 3 months from the date of the communication of the order. The extendable period is only additional 1 month. In this case, admittedly, if we consider the online upload date, then that period has lapsed. So what is the remedy available? So there are 3 interesting issues, that conceptual issues I want to discuss here. See, first issue is that under section 169, that provision deals with the service, the manner in which the order can be served to the taxpayer. Now if you see section 169, very interestingly, 169(1) says any decision, order, notice or other communication under this act or rules shall be served by any one of the following methods, namely, and then there are methods given from clause A to clause F. Now clause F says that if none of the modes aforesaid is practicable, then by affixing it at the place of business of the taxpayer. That the issue is whether department is liable to go sequentially and first attempt to serve the order by either physically sending it through post, and in a situation where if that service fails, then the department is right in uploading it on the common portal which is under clause D, or whether department can straight away upload the notice and the order on the common portal and deem it as a valid service of the notice or the order, as the case may be. See, here in my opinion, the way clause F has been structured, the view that I am taking is that the mode in which the notice or order can be served has to be done sequentially. Department would not be right in directly going into clause D and saying that since we have made that available on the common portal and therefore there is a valid service of the order. So one is, in such facts, one can very well say that the service of the order has not yet happened because it is only uploaded on the portal, and that is under the tab of additional notices and orders, and therefore in that situation, in absence of any valid service, these orders are non-est in law. It is on this reasoning that we have several high courts, like Allahabad High Court in the case of Ola Fleet, Madras High Court in the case of Fazar Multi-Cuisine Restaurant, Delhi High Court in the case of Anant Wire, has taken a view that in all these situations, these orders are non-est, which are uploaded on the additional notices tab on the portal, in absence of a valid service of this order, and therefore they have caused these orders. In fact, Gujarat High Court has also admitted several petitions. One of the petition is SCA 16217 of 2024, where in similar facts, prima facie Gujarat High Court has given a stay by saying that in such situation, those orders appears to be invalid or non-est in law. See, these are all the orders, what we are discussing are all based on discrepancies. So there the courts are taking a view that, look, these are only based on the written discrepancies. You are issuing online notices, passing online orders, and therefore in such situations, such drastic action followed by recovery action, where the taxpayer are not conversant with the portal or not using the portal, that frequently would not be valid in law. So it is in that background that the courts are taking this. I am not discussing a situation where search has happened. In that situation, probably this argument would be weaker as opposed to the situations what we are dealing with, common situation where based on these differences, the orders are passed. Second ground on which perhaps a challenge can be mounted in such situation is that the case that these are without jurisdiction. So under section 73(1), the officer can assume jurisdiction if it appears to that officer that the tax credit has been shortly availed, wrongly availed, or tax has been short paid. Now, several courts have taken a view in a similar context in the excise era that this kind of provision necessitates that the officer should have some cogent material available to make that allegation. So there should be an existence of jurisdictional fact which clearly indicates that there is a short payment of tax or a wrong availment of credit, and then the officer can assume jurisdiction under 73(1) to issue the show cause notices. In this situation where there is just discrepancies between the figures which have been filed by the taxpayer, and there is an annual return which reconciles the discrepancies, but the revenue deliberately ignores that annual return and merely based on the monthly 3B, 1 and 2A issues such action. So to my mind, there is no existence of jurisdictional fact which permits the authority to initiate such an action by issuing such notices. So that factor also has been considered in the High Court decisions what I referred, where they are saying that even on that ground, the notices also are non-est in law because simply on the discrepancies you have issued the notices, which is not permissible under 73(1). The third issue on which one can possibly contest is this entire issue of extending the period of limitation for this first 3 years. So as you are aware, under section 73, normal limitation period ends 3 years from the due date of filing of the annual return. Because of COVID, the Parliament inserted section 168 capital A, by which power was given on the recommendations of the Council to the government to extend the limitations prescribed under the law. The Council initially recommended extension of the due dates for passing of the order by issuing notification 13/2022. Officers requested the Council that even after that extension, we are unable to complete our work in time, therefore you kindly grant us one more extension. Council in their meeting, which held on, which is the 49th Council meeting, in para 4, Roman 7, discussed that request of the officers and said that, look, we are giving this last extension, there will be no further extension, and basis that notification 9/2023 came to be issued, which extended the period for 17-18 to 31st December 23 and 18-19 to 30th April 24. Subsequently, the government issued notification 56/23, further extending these timelines for 18-19 and 19-20, where 18-19 timelines were extended to 31st August 24. In that context, there was no recommendation of the GST Council meeting for issuing notification 56 by 2023. The only recommendation of the GST Council was for notification 9 by 2023. So in absence of recommendation 168 capital A does not empower the government to issue the notification for extending the limitation under 73. So on this ground, Guwahati High Court has taken a view that the second notification 56 by 2023 is invalid in law, and therefore it has been struck down, and accordingly the proceedings initiated basis that notification have been struck down. Interestingly, recently Telangana High Court, the Guwahati High Court single judge decision, Telangana High Court division bench in the case of Brunda Infra has taken a view that these notifications are valid in law, the notification 56 by 23. The reasoning of High Court is very interesting. The High Court ignores the entire reading of 168 capital A in terms of requiring a recommendation of the council, but proceeds on the basis that Supreme Court, because of COVID, on its own extended the limitation period by saying that this entire 2-year COVID period will be excluded for the purpose of filing any suit or application before the court. That order is applied in the context of GST law to say that if we had excluded this 2-year COVID period, then ordinarily under 73, for 17-18, let us say the due date for the filing of the 9 was January 20. Therefore, 3 years would have ended in 23, January 23. Exclude 2 years COVID period, so it would have ended in January 25. And this extended period by virtue of notification 56 by 2023 is ending prior to January 25 because it ended on August 24. Therefore, the Telangana High Court takes a view that these notifications are valid in law from that reasoning. Now, I have my doubts about that reasoning for the simple reason that if that reasoning is applied to 74, then even for 17-18 today the officer will be right in issuing the notice and passing the order, because if the COVID notification of Supreme Court is applied to GST law, the way Telangana High Court has applied it to justify notification 56 by 23, then even by that logic, all the proceedings under 73 as well as 74 for all the years would get extended if that COVID notification were period of 2 years from 20 to 22, from February 20 to March 22, if it is excluded. So that is recently Supreme Court, in fact last week Supreme Court has issued notice recognizing that there are multiple high courts taking divergent views. They have issued notice in SLP 4240 of 2025, where now Supreme Court will be finally deciding the validity of both the notification. There, before Supreme Court, even notification 9 by 23 has been challenged. But more importantly, the challenge is for notification 56 by 23. In fact, interestingly, after the decision of the Guwahati High Court, Revenue filed a review petition saying that you look at our 54th GST Council meeting, we have ratified in the Council meeting the decision that we are extending the timeline for 1819 and 1920. The single judge rejected that review petition on the ground that under 168 capital A, the notification can be issued on a recommendation, not on ratification. So recommendation has to precede the issuance of notification. A subsequent ratification of an action taken under 168 capital A will not make that action valid in law. So on that ground, the single judge has even rejected the review petition, even if the council has subsequently ratified the decision of extending the timeline for the third time. So it will be very interesting to see. But this is one more ground that you can take to challenge such orders where normal appeal remedy is not available.
To add what Abhay has said, I request all of you to just see section 169 again. If you look at the section 169, it says that any decision, order, summons, notice or other communication. Means the parliament has consciously chosen these different types of deliverables. A decision, order, summons, notice or other communication. So all these things are different. What we understand, today in most of the cases, revenue authorities are only uploading the order on the portal. They don't serve by any other means. Suppose an email is sent to you attaching the order and says that the order is attached. Whether that is a proper service of the order. If you look at the clause C of section 169, by sending a communication to his email address. So only communication can be sent through email address, order cannot be attached. That's not a proper service of the order. Because Parliament has chosen all these words differently. If the same meaning was to be conveyed, then they would not have chosen these words. Further, now they say that in a portal, okay, uploading on a portal, clause D says that by making it available on the common portal. Now the word common portal is also defined in the section. Section 226 defines the common portal, which says that the common portal means a portal as notified under section 146. Now you look at section 146. 146 section does not prescribe that the officer can upload the orders on the portal. It simply says that the government may, on the recommendation of the council, notify the Common Goods and Service Tax electronic portal. For what? For facilitating registration, payment of tax, furnishing of returns, computation and settlement of integrated tax, electronic way bill, and carrying out such other functions and for such other purposes as may be prescribed. There are two notifications issued for the purpose of these purposes as may be prescribed. None of them say that common portal is for the officer to upload the order. So technically speaking, there is no service of the order when the order is uploaded on the portal. So wherever your client has missed the timeline to file the appeal, you can take this ground that order has not been served at all. So therefore, there is no expiry of the time limit to file the appeal. They have issued two notifications for prescribed under section 146. None of them refer to this, that you can upload the order on the portal. Portal is not for that. Section is, I will read it again. Portal for facilitating registration, payment of tax, furnishing of returns, computation and settlement of integrated tax, electronic way bill, and for carrying out such other functions and for such purposes as may be prescribed. So the purpose of uploading the order is never prescribed. So that argument also you can take. Attaching the order on email is also not a proper service.
Just to add, see, my worry on that argument is only this, that if you see 146, it says for the purposes as may be prescribed. Now that
Yes.
prescription can come through rules.
Rules.
If you see rule 142, it says a proper officer shall serve along with the notice so and so a summary thereof electronically. So
Order is
revenue
not
may
there.
argue.
But notifications are not there. Revenue may argue, they say that order.
Through rules we have notified
No, that
that you
cannot
can
be
do that through portal.
That's not
So that
possible.
probably can be.
So you can say that rule is overstepping the section in that way.
No, prescription is coming through rules.
No, but that they say that summary of the order, not the order itself.
No, along with the order.
So that cannot be. That's not a proper service of. The Rajasthan High Court has already issued the notice on this count that it's not a proper service of the notice. So wherever you miss the timeline to file the appeals, this argument also can be taken. So now coming back to my poser 12. So this case is based on a very recent judgment of the Delhi High Court. It's a case of Indigo Airlines. Indigo has aircraft leased out from the foreign parties. Now these aircrafts require periodical maintenance. So parts are taken out from the aircraft and parts are sent to a foreign destination for repair and maintenance. So whatever the repair and maintenance charges are there, that will be paid in convertible foreign currency. Okay? And then part will come back to India. So when it comes to India, the customs department says that I am not aware about the GST provisions. I am only concerned with the customs law. Customs law says that importation of any goods in the territory of India is an import of goods, and that is a taxable event for my act. I will levy basic customs duty and also IGST under this proviso to section 5(1) of the IGST Act. SSC said that I am not importing the goods, I am importing the services. The goods were sent for repair purposes only, and therefore only one GST can apply. There cannot be two GST on this, as an import of basic custom duty and then import GST under the Customs Tariff Act, and then again as an import of services. So the Delhi High Court has said that SSC is only importing the services. He is not importing the goods. So therefore there is no question of payment of any basic customs duty. How this judgment will be useful? See, today there are a variety of ways of importing the services. Like you want to purchase the technical know-how. A technical know-how you can download from the server and use that technical know-how. A technical know-how can be supplied to you on paper or on a floppy disk or a CD or a DVD, etc. So they are goods. If you bring it to the customs port, then you may have to pay customs duty as treating this as a goods. So if there you can argue that I am only importing the services. Another transaction is like many people are taking the vessels on a hire. So let's say someone in Singapore is owning a vessel. Now vessel, I have hired it for my own purposes, let's say for 12 months. And when the vessel comes from Singapore to India, I will convert into coastal run. I will provide the transportation services to Indian coastal waters, to various persons. So there, whether I am importing the goods or I am importing the services, because the vessel is taken by me on lease. Okay. So there, this judgment can be useful that I am not importing any goods. I am only importing the services by leasing of this vessel, and there is no import of any goods. So this judgment is good. Only the judge is in trouble because it's the Delhi High Court and the same judge whose the fire incident took place and sum of rupees 15 crores is found. So the judgment is good, judge is in trouble. I don't know. That's the judgment.
So that whether it is found or not is agreed.
Yeah, and the same judge, presided by the same judge at a division bench. So it's a recent judgment of the Delhi High Court. So that's also, that argument can be used if you are importing the services and the goods are also coming, then you need not pay customs duty, basic customs duty and import IGST.
Yeah. Next is that royalty related. Already Supreme Court 9 judges have decided the matter, and I don't want to discuss anything on royalties. Government, now that royalty matter is final, and so finally outcome is that promoter is required to pay the GST, or anybody who is paying royalty to the government will be required to pay the GST. Number of notices are already issued by the department, and clients were in dilemma what to do. So now, how you can deal with this situation right now? If input tax credit is available, promoter can choose, or anybody can choose to pay the tax and take the credit. Correct? So if it is possible, there will be no financial loss much to the supplier, and he can avoid the litigation and everything, penalty and everything. So he's asking you the question, sir, 1718 to 2022 or something, I have a liability of under RCM for royalty. Shall I pay and take the credit? If I will pay, will I get the credit? So there is one, for that we need to understand that provision under the RCM. If you receive the services from an unregistered person, in that case, creditable document is a self-invoice. And what is the time limit for issuing the self-invoice? Up to 31st October 2024, there was no time limit. So if there was no time limit, you can issue even that invoice today for 17, 18, 18, 19 also, and you can take the credit. So in such a case, you can choose to pay the tax and take the credit. Correct? So yes, you can choose to pay the tax, take the credit. This is also supported by that circular number 211, which is recently issued, which says that you can take the credit. You can raise an invoice, and for the time limit of a 16/4 shall be started from the date of an invoice. Correct? So this is one situation. Mostly such a notices are issued under 74. So what shall be done? Let me tell you, if it is under 74, there is no legs to stand, because when there are 9 judges are required to be, discuss this matter and decide. So it is definitely a question of interpretation of a law, and I think charge of a suppression will not survive in such a matter. So 17, 18, either way, the demand may be dropped in the future. So that, and if today, even if the SOCO's notices are in under 74, you should challenge it. You should go to the appeal. you can get it converted into the 73, and as Bharat Bhai has already suggested, there is no time limit. Even after 25 years, you will get this benefit under the current scheme. So this is how. That last question is that, what if that similar liability for GTA services for a registered person? Suppose you have not paid the RCM and that supplier was registered, and transactions are also reflected in your 2B as if RCM is payable. So in that case, that ratio laid down by that circular may not be helpful to you, and I think department will challenge, and issue is not free from doubt. I think that's all. I don't want to add anything. Let it finish quickly now.
So coming to poser number 14, actually the answer to this poser is very simple, but what I wanted to develop on it was that, when GST law was introduced at that time of supply was being given. So there was a specific time of supply of, supply of vouchers, correct? Supply of vouchers in case of, that voucher can be used for the goods, that voucher can be used for the services, and for that time of supply was given. After a period of 7 years, they realized that, vouchers are not taxable, right? Correct. So somewhere in December 2024, they came out saying that, vouchers are not taxable per se. Correct. And in recent budget, they have deleted those section 12.4 and 13.4 of CGST Act. So, of course, there are certain more things that for branding purposes, if on the vouchers something is printed, for that amount is being paid, that goes into marketing services. If I am hiring some persons to sell my vouchers and paying the commission, and that commission will be taxable. So that all are some additional part, ancillary part to this particular poser. What I wanted to develop on is that merely by mentioning the time of supply, and Jigar Bhai will also that merely by mentioning that this particular supply is exempted, that does not mean primarily it is been taxable. So merely saying that it is excluded, that does not mean it is included. Now this particular scenario or this particular situation is again coming out in one another case, and now it has been confirmed in a recent judgment of Gujarat High Court. In another case, તમે લોકો પૂછ્યું હશે કે TDR ઉપર ટેક્સ લાગે કે નહીં, જોઈન્ટ ડેવલપમેન્ટ એગ્રીમેન્ટ ને રીડેવલપમેન્ટની અંદર. તો ઇન દેટ કેસ ઇફ આઈ આર્ગ્યુ, આઈલ ગો એન્ડ આસ્ક ડિપાર્ટમેન્ટ, તમે બી પૂછ્યું હશે કે ભાઈ GST કેવી રીતના લાગે છે, ક્યાં લાગે છે, વેધર ઇટ સપ્લાય, વોટ આન્સર વિલ વી રિસીવ? કે there is a notification 4/2018, correct? There is a notification 6/2019. It says that tax is payable. But go again and read those notifications. It does not say tax is payable. It merely says the time of supply on which GST is required to be paid by whom. Correct? So I am trying to draw an analogy from this particular scenario, saying that merely by mentioning or giving a time of supply by way of any, in section or by way of notification does not, say that it is taxable. And this is the classic case, or classic case of misfire, misinterpretation by the department right from the beginning, or it's a brilliant mistake that has been committed. That if we refer to the definition of goods or services, there is included actionable claim, but again it is excluded in Schedule 3. Correct. So now at this point of time they are saying that vouchers are actionable claims and they are not taxable because it is covered under Schedule 3. So this analogy, thus I was trying to relate with this particular scenario, that wherever time of supply or exemption or for that sake any other thing is given, that does not automatically means that GST is payable on that particular, unless and until it is covered under the definition of goods, services, or the definition of supply.
The next poser relates to the closely limited exclusively closely held public limited company and LLP are run by one family, and the purchase is made from the Assam to Gujarat, and then company is selling goods to LLP for export. There is a single warehouse, so in one premises limited company and LLP is there, and therefore they have a query that when the sale is taken place from the company to LLP and goods are lying in the same building, so how to establish this transaction when the GST audit and GST query has been raised? How to establish movement of goods and how to establish receipt of goods, credit criteria, everything. So in such type of cases, first of all, separate financial records are required to be maintained by both the company. There should be a separate demarcation in the one building. So far as if the building is having area of 500 square meter, then 300 belongs to the company and 200 belongs to the LLP. That demarcation must be there. If that demarcation is not there, then there will be the allegation there will be no actual sale by one company to another, and the credit of the LLP will be in trouble. Thereafter, there should be proper documentation maintained for the keeping of stock, other record like invoicing, banking transaction. There should be a clear demarcation for those records also. If that demarcation is not there, then there will be again a lots of issue between while availing credit and making sale by one company to another. Because in this case, the poser has been framed that after purchasing from the company, LLP is making export under LUT. So in that type of cases, LLP is going for availing a refund, and while availment of a refund, though there is no prescribed condition that ITC is required to be proved as a genuine, only the refunding authority has to check that export has been done or not. So far as availment of an ITC is an altogether aspect of the audit and other assessment proceeding. So that is not required to be done, but in future wherever the query will come, audit people will come, then this type of a demarcation, separate record keeping, separate stock keeping will prove that they were the one common family is running this business, but the both entity were separate entity, and you can easily complete all the future compliances. Thank you.
So I will just in 1 minute wrap up my 3 balance posers because time is very limited. So coming to the poser number 16, essentially 2 issues are involved. One is that whether amount deposited during investigation can be treated as a pre-deposit, and second, whether pre-deposit can be paid from the electronic credit ledger. So on that first issue, already in exercise also we have the circular number 984, where the board has taken a view that any amount paid during investigation is a deposit, so it will be considered as a part of pre-deposit which you are statutorily required to pay. Second, whether pre-deposit can be paid in GST from the electronic credit ledger. Now we have a jurisdictional High Court decision in the case of Yasho Industries, where the High Court has taken a view that it can be paid. So there is no mandate that it has to be paid only from the cash ledger. Poser number 21, it deals with a situation where the cross-examination has not been granted, relied upon documents have not been granted, and the assessment demands have been framed. This again we have agreed by that decision first. First that controversy will have to be settled, and then the adjudication can be undertaken. On the rely upon document, we have Sangi Textile Processors, where the Supreme Court has taken a view that non-submission of relied upon document is a serious breach to the entire adjudication process, and therefore demands cannot sustain. Case study 6, it deals with a situation where for 21-22, based on the discrepancies, the show cause notice has been passed, has been issued under 74. 2 questions are there: whether pre-SCN consultation is mandatory, and second, whether without initiating the scrutiny of the returns, can directly show cause notice can be issued. On whether pre-consultation is mandatory or not, even though the government has modified rule 142(1)(a), by now indicating that the proper officer may issue the notice, that amendment comes into effect from 15th October 2020. Whether that would imply that now DRC 01A is not mandatory, my view would be that it would still be mandatory. The reason is that if you look at the scheme of the law, under section 74(5), the officer is mandated to communicate the amount which he is proposing to recover thereby giving the right to the taxpayer to deposit that money along with interest and only 15% penalty, and then the law provides for the closure of those proceedings. Now that right of seeking the closure of the proceeding gets defeated if 1A is not communicated, because in absence of 1A, the taxpayer will not be in a position to exercise that option which is statutorily available under 74(5). So in my opinion, even after this amendment, will have to be read as shall in the context of Rule 142 1A. We already have in a similar context under the pre-GST era decision in the case of Amadeus India, Delhi High Court, Gujarat High Court, L&T Hydrocarbon, where the view taken by the High Court is that pre-SCN consultation is mandatory and proceedings initiated without pre-SCN consultation would not be valid. So this probably covers the issues.
Jai Mahakal is also now. So this poser number 17 is related to basically the dealing with Gujarat Chamber of Commerce and Industries judgment, assignment of leasehold right. So as a supplier, you may not have charged the GST, then now you are protected by the Gujarat High Court judgment that GST is not payable, so there is no problem. But suppose you have charged the GST and you have collected it from the recipient, then whether you can seek the refund. Then the unjust enrichment will hit you because you have already collected from the recipient and now you cannot seek the refund from the government. Then the question comes that whether the recipient can claim the refund. Recipient can claim the refund. In 2015, in identically worded provision section 11B, Supreme Court has said that there is no bar in the statute by the recipient cannot claim the refund. So Oswal Chemicals and Fertilizers is a judgment where they have said that the recipient can also claim the refund. Now the problem will be that Gujarat High Court has not dealt with the issue of input tax credit. Suppose the recipient has availed the input tax credit and the department may be litigating that issue, that credit is available or not. So in that case, what you can take an argument that ultimately the tax was not payable. Somebody has paid it, I have claimed the input tax credit. So input tax credit at my end cannot be disputed. Scenario will be like recipient has availed the input tax credit, utilized also. Department has not litigated, nothing to be done, right? So if they invoke the 74 will not be invoked in this case because it's a pure question of interpretation. So if the section 73 timelines have passed, nothing to be done. If recipient has availed the input tax credit and department is litigating, there you can say the tax itself was not payable. I have claimed the input tax credit, that itself should be treated as a refund because otherwise I was eligible to be eligible for refund. So that's the answer. And so far as sometimes what will happen that tax is paid. Now the refund is arising by the, let's say the supplier himself can claim the refund. He has paid to the government but not charged to the recipient. So in that case he will claim the refund, but now the time limit of 2 years has already passed. So what he will do? Department will simply say that now because he has paid the tax in say, let's say 2018-19 and now the judgment has come. So whether the time limit of 2 years will apply or not. Okay. So there are some judgments. One is a BLA Infra, is a Jharkhand High Court judgment 2025 VIL 103 Jharkhand, which has held that the section says that an SSE may file the refund claim within the period of 2 years. So the word is interpreted may. So it is interpreted as a directory in nature and not mandatory in nature. So even beyond the period of 2 years, if the SSE files the refund claim, refund is to be granted. And the similar view was taken by Madras High Court also in Lenovo India's case 2023 VIL 799 Madras High Court. So both these high courts have interpreted that even after the period of 2 years is expired, you can claim the refund. Now the another interesting point is Gujarat High Court was dealing with one proposition that SSE paid the tax on a notice pay recovery and all. Let's say somewhere in 2020. Then in a 2022, 3rd August 2022, government came up with a circular that on this type of charges, GST is not payable. Then he filed the refund claim. So department rejected the refund claim on the ground that the refund claim is filed beyond the period of 2 years. High Court interpreted that the 2 years time limit will start from the date of a clarification and not from the date of payment. So since you issued the clarification on 3rd of August 2022, and SSE is filing the refund claim within that 2 years period, then the refund is to be sanctioned. So what ratio we can draw from this is, The Gujarat High Court judgment came in January 2025. So from that day, that's the event which enables me to seek refund. So therefore, my time limit of 2 years would start from the date of a Gujarat High Court judgment. That is what you can argue. And so far as those issues where I booked the apartment is cancelled, so the refund is to be sought. In 2022, they have issued a circular that the 2 years time limit to seek refund will start from the date of cancellation and not the payment of the GST. So put together all these things, you can say that the time limit of 2 years will only start from the date of the Gujarat High Court judgment, or it will not apply at all. That's both the things are possible. So this was poser number 17. 22 is already dealt with by Punit Bhai, is the same thing. Mining royalty, RCM payable or not, and you also refer to the circular.
Excuse
Only
me.
thing is,
So we are running short of time and we need to submit the hall. Can I request you to wind up?
yes, ma'am, we'll wind up.
I'm very sorry. Yeah, big round of applause for all our dignitaries on the dais. Can we all give them a standing ovation, please? Yes.